Today's video will detail the pivotal decisions I made to reach 100 million in managed assets by the time I was 35 years old. So including how to grow your portfolio of clients, how best to explain to clients what you're doing with their portfolio, what to do when your investment program doesn't go so well in the short run, how to make closing the sale the easiest part of the transaction, how to consistently bring clients new investment ideas, when to discuss alternative investments with your clients, how best to benefit from incorporating technology into your portfolio management, and talking a conservative client into taking a bit more risk, and so much more. I want to say a huge thank you to everyone here who hits the like button and leaves a comment down below. Growing your portfolio of clients and your growth in business as a financial advisor. So the more that you do for your client, the better off you're going to be, the better off the client is going to be. One way is to offer a very, very broad platform of services and products. Doesn't mean you have to be the expert at every one of those investment products or be perfectly knowledgeable about every service, but you do need to bring people in that can do those services and connect your client to organizations that can invest in certain ways. I think the most important thing to remember when working with clients is you have to explain to them why you're doing all the things that you're doing for them in a friendly, light way. Key is that you're not a hard salesman. We're not salesmen, we're advisors, and yet we have to convince people that what we're suggesting for them is the right thing for them, but at the same time you certainly don't want to do any kind of a hard sell. So let's talk a little bit about what happens when your investing program doesn't go well in the short run. And so there's times when the investing markets don't do well. We've been through the technology crash of the early 2000s, the Great Recession crash of 2008, 2009. We had recently a pandemic crash. So when those things happen, clearly you have to have a plan set in place prior to that, whether it be rotation models for protection or limit risk by having a less risky asset allocation. When clients go through that kind of economic downturn, they need to know that you have a plan and articulate that plan real clearly. So then once you have that plan in place, then you make sure you execute on the plan and continually communicate that plan to your client. If you're raising cash and getting out of the markets, make sure clients are aware of that. We use podcasts and videos to explain that on a group basis, so everyone has the opportunity to hear that directly without having to make calls to every individual investor. But certain investors, you'll know their personality and you want to call them personally as well. But we try to communicate with everyone what we're doing in economic downturns, especially because there's a lot of tension, people are more nervous. We've been through a depression, we've been through wars, technology crashes, Great Recession. Markets always recover. The concept of risk and risk management and risk recovery generally follows the same pattern. So the markets will recover, but during that panic period, people make really, really bad decisions. It's important that you make sure that you have a plan for your client, that you're communicating that plan with the client all through that economic downturn. Maybe it'll require more contact during economic downturns, and if it requires that, then you have to do it, of course. But make sure that they know you have a plan, and then follow that plan and give them comfort that you know where we're going and what we're doing. Whenever we lose a client relationship, it's usually because we didn't do that well enough. We didn't communicate well enough, or something didn't work, and it was out of what the client thought should have happened, and we didn't communicate well enough. So we talk a lot about sales and selling, and there's just legions of books written and seminars about selling, and I would argue that selling in the final close of the sale is actually the easiest part. If you've done all the background work, the discussion of what needs are, come back with some certain ideas that meet those needs, and walk through all the details, answer any questions. If you've done all that background work before you get down to the final, then it's a matter of, gee, well, why don't we go ahead and do this? And it's very simple and very non-threatening. It's not a, beat them over the head and sell kind of a thing. It's not that way. To become a good salesperson, you actually need to become a good educator and be very patient. So becoming a great salesman really isn't about necessarily sales. It's about education and bringing people along and making them feel comfortable with what you're offering them. Financial advisors are fiduciaries on the investment advisor side, and we are obligated to the best interest of the client. So if you're actually doing that, you'll inform your client of the right thing to do, you'll keep them informed, and then if there is anything to quote-unquote sell, there won't really be like a sales environment. It'll be a natural progression of the things that you've discussed to meet the needs that your client has expressed. Then once you do reviews, it's important to constantly bring new ideas to your investors. And frankly, the financial markets change. Who ever heard of Bitcoin 20 years ago? Exchange-traded funds are a new innovation that came up in the mid-2000s. Before that, it was just mutual funds. So there's always new things that are happening, and it's important that you keep your clients apprised of those new ideas. And some new ideas are not good ideas. Some new ideas are probably good ideas for them, and it's your job to explain those things to your clients and then show them the things that are relevant to them, things that can really help them, keep them from falling prey to big mistakes. Sometimes investors get involved in things that they shouldn't. Things sound too good to be true, they probably are. So it's your role as a financial advisor to decipher what all these things mean and bring those ideas and other investment programs to the client in a way that is right for them, and only if it is right for them. When we founded Four-Star, we chose to create a very large platform of alternative investments. As I got into the industry and learned more and more about the industry, I realized that while there are stocks, bonds, and liquid assets, obviously for Wall Street type or financial advisor type people to be involved in, there are many, many other investments your clients are investing into that you may not necessarily have had experience in, but your clients are definitely doing it. First of all, most investors with a net worth own a home. They may own some other investment, real estate. They may be investing with other friends in other businesses. They may be investing, as we mentioned earlier, in angel investing or private programs, maybe companies, different types of partnerships, Bitcoin, other things that really have nothing to do with the financial markets. So we decided that since our clients were doing those investments already, we decided to create a large alternative platform that mirrors what our clients are doing. Now the reality is not every investor does alternative investments, and frankly some investors aren't qualified. Certain clients are probably not appropriate to show alternatives to, but most of our high net worth clients and ultra high net worth clients do some sort of alternative investing, and even so they own their home, or they and the bank own their home, and of course until it's paid off. But alternative investments can be a great way to help you build your client base. Let's talk a little bit about technology and products that are introduced. So technology is something that can really be an enhancement for investors. Now people can track their portfolios online. I remember days when the only time an investor knew what their account was worth was on their basic statement. Now they can check it any time. They can look at their account online directly at the custody bank. We have an aggregator software. We use Orion. There's another one called Black Diamond, and those systems have a client portal in which clients can see, and they can see what their portfolios are worth. You can actually also then load all those portfolio holdings into a system to track the daily activity. Now, if investors do and track that, very, very closely every day, sometimes it can lead them to make decisions by watching it too closely. So you have to make a plan, a long-term plan, and that doesn't require trading every day. It doesn't involve necessarily making decisions every day, but at least the technology gives you the access and the information that you can access it at any time that you want. New technology is good. The reality is many investors use it and some do not. While you may have new technology to offer your clients, there are certain clients that are not comfortable with technology and they're not going to do it. Some do it periodically and they need continual training and continual help. Of course, there are some that are right on it. Maybe 25% of the investors that we show systems to are accessing it daily, weekly, or monthly, and the rest not so much. There are times when a conservative, risk-averse investor has objectives and goals that require that they take a little bit more risk. Now, you should only do this clearly when the client wants to do it. But once again, you need to build the background and build a financial plan and build a model that shows that historically based on what they're trying to accomplish, that they need to add a little bit more to growth investments, for example, and that'll give them help them meet their objective. What you don't want is the client to be in a position where they outlive their money, and we sometimes say that's the living in your kid's basement scenario. So if you burn through all your money, you're going to have to live in your adult children's basement. We don't want that to happen. So it's important that you make sure that the objectives are built in to the client's portfolio, and then you track them in a certain way. So thank you so much for watching. If you enjoyed these ideas here, please smash that like button, as we always say, and subscribe to our channel, and leave a comment down below. So don't forget to download our guide on how to get to 100 million and beyond in managed assets by going to forestarwealth.com/advisors. And again, I wanted to reiterate that our only goal here is to help you to grow your financial advisor practice. So if you have any follow-up questions on this topic, any parts of this topic, please write them down in comments below, and we'll answer them directly. If you're a financial advisor looking for more freedom, higher margins, and better training, discuss joining our team by going to forestarwealth.com/advisors. All right, thanks for tuning in, everybody, and keep on growing.